I'm Alicia Haas. I'm the Chief Financial Officer of Coinbase. Coinbase is one of the first and definitely the largest in the US crypto infrastructure companies, and a company that offers the ability to buy, store, transact in over 300 crypto assets on our platform, and then increasingly building on-chain. We have co-founded USDC, which is the second largest global regulated stablecoin with Circle, and are the largest distributor of stablecoins in the US market and globally, including USDC, PYUSD, and others. And importantly, are continuing to build tools for developers for them to build their own crypto solutions, their own payment solutions, and excited to be here for this conversation. Not agree more that we need to meet customers where they are. And what customers have shown us is that stablecoins are being rapidly adopted. Stablecoins have crossed $300 billion of market cap. And the two that have been adopted, importantly, are open infrastructure stablecoins. They are interoperable. They have deep liquidity. They were built on permissionless networks. And I think that's a really important data point around what we're seeing customers adopt. So they were born from necessity to enable traders and market participants of crypto trading have a US dollar to settle into in a 24/7 market. Regular fiat dollars did not offer that because banking hours were not matching the crypto markets. And so as market participants grew accustomed to stablecoins, it's now opened up this door to payments. And we have three catalysts that have occurred. One is regulatory clarity. And with the Genius Act, and for many of you who have been involved in getting that legislation passed into place, I'm really grateful because it has provided now many market participants the confidence to come and now build in this space. We are seeing growth and adoption of banks, PSPs, corporates, merchants. Everybody's now saying, okay, this is interesting. Let me talk about the benefits of stablecoins and what payment flows those could be uniquely suited for in my business. It's not going to fix everybody's problems. There's going to be a lot of credit cards. I fully agree. Just like we text, we email, we send mail. Like, we have lots of ways we communicate with data. We're going to have lots of ways we communicate with value, and we send value to one another. But what we have today is regulatory clarity. We've also seen blockchain scaling. And so we now, for example, with Base, our layer 2 solution, we do $1 trillion of monthly volume on Base. We are already at the thousands of transactions per second. This is real. Theoretically, it has no upper limit on its scaling. I think it's important to think about companies that are focused on scaling only, maybe missing security and or decentralization. So this is an important three-legged stool. I don't think it passes notice that AWS was down yesterday and it impacted a lot of access. Ethereum was not down yesterday. Base was not down yesterday. So decentralized protocols show a lot of resilience, and that's something to think about when we're talking about creating payment networks. And there's already things such as optional privacy on Base. The tooling continues to get better. It's much like AI. Like every month, every year, we just see big leaps forward in terms of these technical advancements. So where this dovetails then with agentic commerce, where we're also seeing these big leaps forward day by day, I think that stablecoins, much like Emily and much like Rich said, are uniquely suited to agents. Agents can't open a traditional bank account. Like, that doesn't get through a bank onboarding process. They can open a wallet. They can be programmed. These are programmable dollars where they can set limits. They can white label the addresses they want to pay with. And as you think about the growing types of machine-to-machine transactions that we're going to have, we think it will grow up alongside of human-to-machine transactions or human-to-human transactions. But it's going to be a growth of the number of transactions that we see. And so stablecoins, we think, are uniquely suited to micropayments. Like, it's really hard to do a 2-cent payment through any other payment vehicle that we have. It's cost prohibitive, quite candidly. It's not cost prohibitive in a stablecoin. It's uniquely suited then to, hey, go do some code for me. Oh, you need to go buy compute? Great, go buy some more compute power from Google Cloud. Like, program that in. Moving with speed. So I think we think there's a lot of very natural problems that will get solved immediately with stablecoins. And we're just at the beginning. And then as our colleagues have shared, each of us, we are all involved right now in building critical infrastructure. We've talked about X402, which is enabling any developer to seamlessly embed payments now. We are building these as open standards. We are sharing these out to the world for others to build because interoperability, adoption, we think will grow to create the most consumer and business benefit. It will lower the cost and create just more inclusion into the financial systems. There will be use cases that will go through different paths, but we believe that this will drive a lot of global adoption of these technologies.